I want to ask you about this massive drop that we are seeing in India VIX today, 17.5% drop this morning. What do you think the market is, certainly so sure about? Do you think that they are anticipating that the worst is over in West Asia, and the earning season is going to be good, and the ride up is going to be rather less volatile and a smooth, slow and steady rise from here on?
Possibly because see, I mean, the markets have turned extremely volatile because of the geopolitical issues which were there. But then, if you see in the last 2 or 3 days, there is not much of news coming from there, so it's assumed that things would calm down, and certainly things will not get worse from here. And because of which we have seen, I mean, the markets bounce back, and the earnings season has started. I mean, we have seen some decent sort of earnings initially. Even Reliance yesterday was quite decent. So I think from that point of view, at least till the beginning of June, I don't think there are too many headwinds as such. Although you'll keep getting some news or the other as far as elections is concerned, but I think people will wait till the first week of June, like when the election results are announced. I think it's only post that you will see a huge volatility. And I mean, as far as the levels are concerned for the market, I think like we have seen an extremely good bounce back, which clearly shows that the confidence and sentiment is positive. But then technically, I think 22,500, 22,600 is a major sort of a resistance level. I think going beyond that could be a bit difficult, but if it goes beyond that, we could actually see 23,500 quite soon. But the question is, I think you should watch out for this levels of 22,500, 600. I mean, if that is breached, then yes, I think you should again turn quite bullish. But as of now, I think that the markets are in this range of about 22,000 to 20,500.
All right, 25,600, 22,500 could be the litmus test for Nifty. If it passes that, it could move beyond perhaps to 23,500. I mean, interesting view coming from you, sir, who traditionally has shared a contrarian view on the market, and because the market has been on a bull run. Because of this volatility and what's going on in West Asia, gold has done phenomenally well among commodities, but gold isn't alone in its bull run in 2024. In fact, silver, zinc, other commodities, nickel, aluminium also comes to mind. They have hit multi-month high. I mean, should one add them in their portfolio, and what would be the best way to perhaps, for retail investors to gain exposure in such commodities?
I think, see, for the retail investors, I think the only commodity they should be looking at is gold, because I surely will not suggest the other commodities because they are meant for the HNIs or institutions or corporates. It's not really meant for retail. But if you look at gold, again, it's moved up quite sharply because, thanks to the geopolitical issues which are there. But then I think at these levels, I don't see too much of an upside from here immediately. I mean, although you have figures of, 1.3 lakhs and 1.5 lakhs coming for gold in the year 2030. But then, even if that is true, you could still see a dip before that sort of a move. Because what we have seen in gold, if you see the last 20, 30 years, I mean, it moves very sharply in a block of, say, 12 months or 15 months. And post that, you see it either turning flat or negative over a slightly longer period. So I think that move is already done. And could see a dip or a sideways movement for a while before the next move up. So it doesn't make sense for investors to buy in right now and wait it out. It's better to invest somewhere else. I mean, especially, like if you're looking at short term, I would say equities. Like you rightly said, I mean, I'm a contrarian, but at this point of time, surely I will go with the move which is there in the market. And I mean, again, if you notice, I've been giving you technical levels, and I'm not really talking fundamentals because I still feel fundamentally the markets are quite expensive as of now. And I mean, from an investment perspective, I'll not really invest in a big way. But from a trader's perspective, I think it's a great market.
All right. I mean, since you are concerned about valuations, what should be the strategy? Maybe hold some cash from here on and let the dust settle till June 4. Let us get some clarity, or maybe wait till budget before allocating money. Follow up buying from here on.
No, I would say that one should be in cash to a certain extent. I mean, I would surely say 20-25% cash at this point of time because, like I said, fundamentally, it's quite difficult to justify these levels, especially in the mid cap and the small caps. Like large cap and blue chips, the valuations are decent. I would say slightly on the expensive side. But then, if the market's correct for whatever reason, post elections, even the large cap and the blue chips are, bound to fall. So I would say that hold on to about 20-25% cash, wait for the election results because I think the best is already discounted for. For example, people have already discounted 400 plus for BJP NDA alliance. So in case that does not happen, you'll see a correction. And at the same time, we need to see as to how good the monsoons also are because as of now, it's quite positive. People are talking of like normal monsoons, but in case there's an issue with that. So I think one should wait for the election results first. In case they are in line, even the markets are higher, I would still say, buy at those levels. But right now, possibly hold on to some amount of cash.
All right, and commentary coming on monsoon is of course, multiple weather forecasting agencies, they are expecting a normal monsoon this time around for India. So perhaps that could be another factor that could, perhaps lead to some bit of a rally from here on. But, budget, election results and monsoon, they are 2-3 months in the future. What's happening now is the Q4 earnings season. We have some big ones today: Tata, Elxsi, ICICI Prudential, M&M Financial Services and MCX. But the biggest will be Tata Consumer Products. Amit, I'll come to you first. What's the street expecting from the FMCG company?
Tata Consumers, yeah, big one, and it's all positive. Revenue is likely year on year likely to grow almost 11%, 10.3%. Profits up 8.6%, EBITDA up 16%. Now, the earnings are being led by the Indian foods and Indian beverages business, and the acquisitions seem to have done well for Tata Consumers. They acquired Organics India for 1900 crores, Capital Foods for 5100 crores. Nourishco is another company that they had acquired, which is basically growing at almost 35 to 40%. So the foods business and the beverages business, India beverages business, is leading their earnings, followed by the salt and the tea business, which were basically the earlier expected drivers. The stock, if I see today, is slightly down. Good morning, Mr. Baliga. What do you make of Tata Consumers? The stock is close to its 52-week high,
Right.
just about 8% away. Is it time to cash out, or is it time to basically hold for an ensuing rally in this?
No, I really don't see the stock moving up, based on the earnings because the estimates which are there, show that the revenue possibly could be up about 10%, but possibly profits could be lower. I think that could be a bit concerning. Again, I think the estimates are anywhere between flat to about 7 to 8% down as far as net profits are concerned. So I think if it is this sort of earnings, then possibly we could see some correction after this move.
Since we are discussing earnings, wanted to get your view on the management commentary coming in from the IT companies. Apart from TCS, the guidance from Infy, Wipro, Persistent, they suggest flattish growth in FY25. It looks like another difficult year for our information technology companies, sir.
Looks like it because if you remember, we are discussing about 3 or 4 months back on IT, and I had said possibly we should start looking at Q2 of FY25 to start buying into IT because I was expecting that possibly post Q2 we could see like an up move as far as the prospects of the IT companies are concerned, the order flows. But now with this management commentary, I think that gets delayed further. I think we should possibly wait for Q4 of FY25 to really decide whether we should be getting into IT or not. So for the time being, I think one should keep the portfolio allocation as far as IT is concerned to the lowest level possible. Earlier I used to have about 15 to 18% allocation for IT. That's been brought down to about 6% now.
All right, that's a major cut in the portfolio allocation. From 15 to 16% to about 6% now. It looks like it could be another difficult year as far as IT is concerned. But another company that I wanted to get your view on the results on was HDFC Bank, and especially the more than 3 times jump in provisioning. I mean, the management said that it wants to make the balance sheet more resilient, but some have speculated that there might be troubles brewing in the retail and the wholesale loan because the margins have in fact fallen sharply over there. And I mean, considering that provisioning has increased substantially and profits, they have only jumped by about 3% or so. Could it be a bit of earnings smoothing from the management, sir? What's your view?
Yeah, that's possible because I think a decent amount of cleaning up was being done. Clearly, I mean, post the like the mega merger. I mean, I think this is the last bit of cleaning up which has happened. I don't think that we'll see continued higher provisioning post this quarter. So I'll not really be too worried as far as the HDFC Bank is concerned. If there's a correction, if it possibly falls to levels of about 1450, 1460, I think that's a good level to again start buying.